everybody. Welcome back. My name is Reagan Prescator. I'm a sales representative at Royal LePage Performance Realty and a buyer's agent at Schurter and Associates Ottawa Real Estate Team.
And I'm Michael Schurter, real estate broker with Royal LePage Performance Realty and the team lead here at Schurter and Associates. We've got one more episode here with Reni McNeil, our mortgage agent, national award winning mortgage agent, Reni McNeil. And we wanted to let Reagan ask some questions that she's been fielding with first-time home buyers, specifically that relate to the financing side of a deal. So, Reagan?
Yeah, thanks, Mike. So, Reni, let's start with the bare minimum. What are some things that you wish that first-time home buyers knew? Even if maybe they're obvious to some, not always to others. Let's go like super micro.
Super micro. First piece of advice is get pre-approved. Absolutely. Before you do anything, before you start looking at a home, before you get in your car to go see a real estate agent, get a pre-approval, because it's going to give you an idea of the budget that you can fit in, and not just the budget you're approved for, but the budget that you want to stay in, your monthly cash flow that you want to work with. And then you're not going out and falling in love with some homes that are out of your price range.
Okay, and then payments. So monthly, bi-weekly, advantages, disadvantages. Let's break that down a little bit.
Sure. So payment frequency, like you just said, we have monthly, bi-weekly, accelerated bi-weekly, weekly, accelerated weekly. I think the biggest thing that I end up explaining to clients is the difference between bi-weekly and accelerated bi-weekly. So clients assume, they hear it, and it's a common misconception out there that if you go bi-weekly, you're going to pay your mortgage off quicker. You're not, because basically what the biweekly payment is taking the monthly payment, timesing it by 12, dividing it by 26. So it ends up to be maybe $1 or $2 in the difference at the end of the year. When you get to pay more of the principal off is when you go accelerated biweekly. And how that's calculated is they take the monthly payment and simply divide it by 2. So, you end up getting a decent chunk, usually 100 to 300, depending on the mortgage side, obviously, more towards the principal of the mortgage versus paying a little bit of mix of principal and interest.
Okay, so then we also get clients sometimes who are paying a certain amount in rent and now want to purchase their first home, but they don't necessarily qualify to pay the same mortgage-wise as they are in like paying for their rent. So can you talk about why that might be?
Yeah, because when you're applying for rent and you're renting, it's basically your personal budget. So whatever you feel you can afford and what you can't afford on a monthly basis. When we're purchasing a home, we have regulations that we have to follow. So we have what we call the total debt servicing ratio, TDSR, and you have to be 44% is the absolute max or under. So 44% of your income versus your monthly debts, including that new mortgage payment. So if we're not under that 44%, we can't approve you on an A-side purchase.
So then let's talk about mortgage insurance. What is that? Why do I need it? Why is it important?
Yeah, so there's really 3 different insurances that you hear when you're purchasing a home. So there's the default insurance, there's title insurance, and then there's home insurance. So the home insurance is like your fire, your natural disaster type of insurance that you have to have. The title insurance is an insurance that you will get through your lawyer when you're closing the property, and it protects you on things in, the title of your property, the survey of your land. So if there's any ever issues down the road, you can fall back on that registration when you first bought. And the big one is default insurer. So we have 3 different default insurers here in Canada. There's CMHC is the big one a lot of people know. There's previously Genworth, now Sequin, and then there's Canada Guarantee. They are required for all purchases with clients that are using a 20% down payment, less than a 20% down payment, sorry. And it's basically covering the lenders if the client were ever to default on their mortgage.
Okay, so when they go to close, what does it look like closing on a mortgage?
Yeah, so at closing day, that default insurance premium that I mentioned is added to the mortgage balance. So it's not an out-of-pocket expense at the time of closing. What you do have to account for at time of closing is the down payment that you want to use, obviously. The legal costs, your lawyer fees, that title insurance cost that I mentioned, which is usually about $750 for title insurance, give or take. And then a big thing that a lot of clients aren't aware of is aside from the down payment, we need to ensure that you have 1.5% of your purchase price put aside for closing costs. It might not cost that much to physically close a mortgage with legal fees and everything, but all lenders require that you have that just in case any last minute things pop up and you need access to those funds on closing.
Okay, great. And are there any other last little tidbits that you might want to leave first-time home buyers, maybe advice when looking for a mortgage, anything like that?
Build a village. You know, you have to have a great circle of experts around you. The real estate agent, your mortgage agent, you know, a lawyer, you need maybe an appraiser, an inspector. There's a lot of people, and you need to surround yourself with a great village. And I find the smoothest transactions that I've ever, you know, went through with my clients are ones where the referral partners kind of work together on the client's behalf. So, you know, you guys refer me a client to work with, and then we refer a lawyer that we use on a regular basis, and so on and so on. It's just a very smooth transition. So surround yourself with a team of experts.
Great. Michael, do you have any questions you might want to add?
No, that's an awesome note to end on. That sounds great.
Okay, great. Well, thanks so much, Renee, and thank you for joining us. We hope everybody liked our series here with Renee. And as always, if you have any other questions, feel free to comment on these videos, and we'll see you guys soon.
Okay, thanks.
Thanks.